CC, welcome to the orbit. It is Tuesday, January 9th. We've got futures lower this morning. We're looking at the SPY down about, let's call it 0.5%, a little bit more than 0.5%. And that is versus the expected move of 0.4% or less than 0.5%. So the market is down more than what options were pricing pre-market. We've seen a lot of that over the last 2 weeks, let's say, where the pre-market move is about in line or sometimes a little bit more than the expected move. And the reason for that is because volatility is super low. And if the market is going to move pre-market, it is not going to take much for it to be at the expected move or more. Now, this is following a strong rally in the market yesterday, and this is a little bit of a give back on that rally. We will see if it was a false rally or if this pullback gets bought this morning, then it could be signaling a little bit of a breakout, or at least an attempt back towards those highs that we saw recently going into year end. Of course, we have CPI later this week, and we actually see earnings season begin this week with Friday's really the big day where we have JP Morgan, Bank of America, Wells Fargo reporting. But if you look at this week and the volatility, we see a little bit of a pop to about 13 for Thursday and Friday. But then look at next week, right back to 10, 11, very low volatility. And remember, this is earnings season starts to pick up here, especially towards the end of January. So volatility is quite low into earnings, and the market doesn't necessarily feel overloaded with gamma like the way we saw in in November into December. So it might be something interesting. We'll revisit this, that we will probably see some pretty small expected moves historically into earnings, and there might be some opportunity there. We might see some moves that maybe options missed out on a little bit. The way that kind of works with earnings is the larger the expected move historically and the higher the vol it is historically, the more often that a stock will finish within the expected move when it reports earnings. The lower the volatility going into an earnings event, the smaller the expected move, the more often it will violate that expected move and go outside. Now, the magnitude of those moves are different. When the volatility is high, sometimes you see massive moves in the stock that options were unable to price. But that doesn't happen more often. It actually happens less often, but it could be of a bigger magnitude. Checking in on the Qs, we are down almost 0.75%, and the expected move coming into the day was about 0.6, 0.7. So again, just a little bit, we're lower than a little bit more than what options were pricing for the entire day. You of course see that rally yesterday. And then let's check in on IWM real quick. IWM has been struggling around that 200 level, and we've been talking about it a lot lately. Let's check in where it is this morning. So we're at about 194. You can see this sort of, let's back this chart out a little bit. This attempt to get up above 200. We've got the low of about 193, let's call it. And we are not quite there yet this morning. It's 194.25. So zooming in, you're going to want to keep an eye on this level basically. And is this basically playing ping pong around 200, or was this a complete failure at 200? So something to watch for there. Just looking, talking about those earnings events, let's just go into JP Morgan real quick and look at this Friday. We will be seeing about almost a 3% expected move, 2.8% expected move. Let's look at like that on the chart. I mean, on the chart, that is just nothing compared to what this stock has done. Look at this rally. And you will see this across the board if you pull up XLF, if you pull up some of these other names. Look at that rally. And then options are basically saying only a 2.8% expected move. So this is what I'm talking about, is most likely at low volatility levels, you don't see big moves. However, if you were to see a big move, it is not going to take much for it to be a lot more than 2.8%. And that is one of the things to watch out for going into earnings season at low volatility. Is there is an opportunity if you think JP Morgan's going to um, knock the doors off their earnings, or you think they're going to disappoint. The options are not charging you very much at all for that opportunity to either fade that rally or play for it to keep going higher on that straight line up